Okay, today we see the important terms in the royalty account. The first important term is royalty. What is royalty? I already explained this word in detail in the previous two classes. Royalty is the consideration paid by lessee to lessor. It is a consideration paid by lessee to the lessor for using the rights of lessor on the asset. Okay. It is a consideration paid by lessee to lessor for using the rights belonging to lessor on the asset. Okay. It is calculated on the basis of rate of royalty and output raised. It is calculated, royalty is calculated, consideration is calculated on the basis of actual benefit received. Okay. In case of mining companies, the royalty is calculated on the basis of tons of mineral raised from the breadth of the earth. In case of publication of books, number of books printed and sold. On the basis of books printed and sold, we calculate the amount of royalty. In case of patent, the royalty is calculated on the basis of products manufactured and sold. Okay. So the royalty is calculated on the basis of benefit derived by the lessee by using the asset of lessor. Okay. So royalty is calculated on the basis of following equation. The equation is royalty is equal to rate of royalty into output raised. For example, the royalty is rupees 100 per ton of mineral raised from the breadth of the earth. As per agreement, royalty is rupees 100 per ton mineral raised from the breadth of the earth. Okay, 100 per ton. Suppose the mining company raises around about 10,000 tons of mineral from the breadth of the earth, then royalty is calculated on the basis of rate and output. Rate of royalty is 100 and output is 10,000. Multiply 10,000 and 100, you will get the amount of royalty in case of mining royalty. And in case of books, in case of copyright royalty, okay, author and publisher, in between author and publisher, the royalty is fixed on the number of copies printed and sold. On the basis of books printed and sold, the royalty will be fixed. The royalty will be fixed by the author and the publisher based on per book. Okay. Suppose the publisher prints and sells one copy of book, then the rate is fixed per book. Okay. For example, rupees 2 per book. Rate of royalty is rupees 2 per book printed and sold. Okay. Rupees 2 per book sold. Then if the publisher prints and sells round about 5,000 books, the royalty will be 2 into 5,000. That is the amount of royalty. And in case of patent, rate of royalty is fixed on the per product manufactured and sold. Okay. Suppose the manufacturer produces round about 1 lakh units, 1 lakh unit, and rate of royalty is rupee 1 per unit. Rate of royalty is rupee 1 per unit. Then royalty is 1 into 1 lakh, that is 1 lakh rupee. Like this, you have to calculate the amount of royalty. Okay. So royalty is calculated on the basis of benefit derived. And this rate of royalty is fixed at the time of agreement between the lessor and lessee. At the time of agreement between the lessor and lessee regarding the lease, the rate of royalty will be fixed. This is the point you remember. And second important term is lesser. Lesser. Who is a lesser? Lesser is the owner of the property. He is the owner of the property who gives his rights on the property to the another person for a consideration. He is a owner of the asset or creator of the asset. Lesser is a owner or creator of the asset. He gives the rights on the property or on the asset to the another person for certain consideration. That consideration is called as royalty. So lesser may be landlord. Landlord is a lesser. Or author. Author is a lesser. He gives the rights on the author gives his rights on the manuscript of the book. Rights on the manuscript of the book he gives to the publisher. Therefore, author is a lesser. And creator of patent. Creator of patent means the research persons. Patent. He is a lesser. Okay. And next is lessee. Lessee means he is a person who use the rights of another person. Who use the asset of another person and gives consideration for the use of asset. He is called as tenant. Tenant is the lessee. Then publisher is the lessee. Then manufacturer is the lessee. Manufacturer. Okay. Manufacturer is a lessee. Okay. If royalty is a mining royalty, lesser is landlord, lessee is tenant. If royalty is copyright royalty, then author is a lesser, publisher is a lessee. If the royalty is patent royalty, in case of patent royalty, creator of the patent is lesser and manufacturer is called as lessee. These are the terms you remember, and this will useful to prepare the accounts. Okay. What is royalty? How to calculate the royalty? Then who is lesser? Who is lessee? And next term is minimum rent. What is minimum rent? Royalty is the consideration paid by the lessee to the lessor for the use of rights. That royalty is calculated on the basis of benefit derived. Okay, benefit derived by lessee. And suppose the lessee will not take the benefit from the asset of the lessor, then there is no royalty to the lessor. There is no royalty to the lessor. In that case, there is a loss to the lessor. Okay. Suppose the lessee takes the asset and use that asset, he takes the benefit. On the basis of that benefit, royalty is paid to the lessor, no doubt. If the lessee will not take the benefit of the property after the agreement and that asset remained without use and there is no royalty. Okay. For example, land of a landlord. The mining company took the land and the mining company was not raised mineral from the breath of the earth for some years, then there is a loss to the landlord. To avoid this, at the time of agreement, the lessor and lessee comes to a decision regarding what will be the minimum rent for the asset if the lessee will not derive benefit to the normal level. That is called as minimum rent. So minimum rent is the amount. Minimum rent is the amount that has to be paid by the lessee. That has to be paid by the lessee to the lessor whenever or not he has derived benefit from the asset. Whenever the lessee has not derived the benefit from the asset. Okay. What is minimum rent? Minimum rent is the amount that has to be paid by the lessee to the lessor, whether or not the not he has derived benefit from the asset. If the lessee has not derived the benefit from the asset, he has to pay minimum amount, and the lessee has derived the benefit from the asset, but that benefit is not up to the mark or not up to the normal level, then the minimum amount is to be paid to the lessor by the lessee. That amount is called minimum rent. Okay. Once again, I will tell you, minimum rent is the minimum amount paid by the lessee to lessor, whether or not. Whether or not means whether the lessee has derived the benefit from the asset or not derived the benefit from the asset up to the mark. Sometimes he will not derive benefit from the asset. Sometimes he derive the benefit, but that benefit is not up to the normal level. If the royalty earned is not up to the mark, then the lessee has to pay minimum amount that is called as minimum rent. Okay, remember this. So hence it is also called dead rent. The minimum rent is also called as dead rent or rock rent or minimum rent. You call as a minimum rent. Sometimes it is called as dead rent. Sometimes it is called as rock rent. This point you clear. What is royalty and what is minimum rent? There is a lot of difference. There is very important term. These two are very important term for calculation of royalty. These two are the very important terms for calculation of royalty and preparation of accounts. Therefore, royalty is the amount. Royalty is calculated on the basis of benefit derived based on rate per unit. Royalty is rate per unit and it is calculated on the basis of benefit derived. And minimum rent is the minimum amount payable if the lessee will not commence the work or he commenced the work but benefit derived are not up to the mark, the minimum amount payable. Okay. And minimum rent can be fixed. The minimum rent can be fixed for all the periods, or it may be changing according to the agreement between the lessor and lessee. The minimum rent, it is based on annual base. Minimum rent is based on annual, and that annual rent may be fixed for all the years. And sometimes this minimum rent may be changing in nature as per the agreement between the lessor and lessee. Okay. And I'd like to make 2 points clear. When the actual royalty for a year is less than minimum rent, here there are 2 points. One is minimum rent, another is royalty. Royalty is calculated on the basis of output and rate of royalty. Royalty is calculated on the basis of rate of royalty and output. And minimum rent is the minimum amount fixed for every year based on agreement. Okay. So when the actual royalty for the year is less than minimum rent, royalty is less than minimum rent, lessee will have to pay minimum rent to the lessor. Remember this point. Okay, this is the first point. And second is, when the actual royalty is more than minimum rent, the lessee has to pay actual royalty to the lessor. Okay. Lesser means owner. Owner receives minimum rent if minimum rent is more than royalty. And owner receives royalty if royalty is more than minimum rent. This is the point you have to remember, and we will solve the problem based on these 2 points. So you remember this one. First point is very important. What is royalty and how we calculate? And second is minimum rent. Okay. The next is short working. The third, this is the fifth point, but according to our calculations, it is a third point. Short working. What is short working? Short working is the excess of minimum rent. Excess of minimum rent over royalty is called as short working. Excess of minimum rent. If the minimum rent is more and royalty is less, the excess of minimum rent over the actual royalty is called as short working. It is calculated only when it is allowed to be adjusted. Short working is to be calculated. Short working. Okay, short working is to be calculated only when it is allowed to be adjusted against the future royalty by the lessor. This point you remember. Once again, I will try to clear the doubt regarding short working. Okay. Whatever benefit the lessee derives, whatever benefit the lessee takes, for that royalty is fixed. Royalty is fixed. That is a consideration. But if the royalty is less, if the royalty is very less and negligible one, at that time he pays minimum rent to the landlord. He pays minimum rent to the landlord. So royalty is the consideration for the use of the right. We agreed. But if the royalty is less than minimum amount of agreement, then minimum amount is paid to the landlord. So whenever the lessee pays minimum rent to the landlord, at that time, some amount is paid out of his pocket. You remember this point. If royalty is less than the minimum rent, at that time, lessee pays minimum rent plus some amount from his own pocket to the landlord. Whatever some amount pay out of his pocket is called as short working. Is called short working. So the excess of minimum rent over the royalty payable is called as short working. It is calculated only when it is allowed to be adjusted in the future years. Okay. What is short working? Short working is the excess of minimum rent over royalty. The equation is short working is equal to minimum rent minus actual royalty. Remember this. Short working is equal to minimum rent minus actual royalty. For example, I will tell you one example. Suppose the royalty fixed per ton is 2 rupees. 2 rupee per ton is the royalty. And output is mineral raised is 5,000 tons. 5,000 ton mineral raised. Rate of royalty is 2 per ton. Then total amount of royalty is 10,000. But as per agreement, the lessee has to pay minimum rupees 15,000 per year. As per agreement, lessee has to pay minimum 15,000. Minimum 15,000. Whatever minimum fixed is there, that is called as minimum rent. So minimum amount is 15,000. Royalty is calculated is 10,000. So benefit derived is 10,000, but minimum amount payable is 15,000. So he is paying 5,000 extra out of pocket. That extra out of pocket payment is called as short working. Okay. Whatever extra amount he pays out of his pocket, which is paid without any benefit, that amount is called as short working. And as per the agreement between the lessor and lessee, that may be recovered. That may be recovered in the coming years, in the next years, if there is a provision for recovery of that amount. Recovery of that amount. Recovery of that amount is called as short working. Okay. Remember this, short working means it is the excess of minimum rent over the actual royalty. Okay. Actual royalty. Then how to recover this short working? Next point is recoupment of short working. How to recover the short working? Recoupment of short working. What is recoupment of short working? Recoupment of short working means whatever short working of the current year, whatever short working of the current year may be recovered by the lessee from the excess of royalty over the minimum rent. Excess of royalty over the minimum rent in the next years as per the agreement between the lessor and lessee. Whatever out of pocket amount paid by lessee in the current year, that may be recovered in the following year. Recovered in the following year if the royalty is more than the minimum rent. That is called as recoupment of short working. Okay, you see this sentence. It may certain in the royalty agreement. In the royalty agreement, short working may be recovered in the subsequent year. Whatever short working is there, that may be recovered in the subsequent years out of excess royalty over the minimum rent. Only when there is an excess of royalty over the minimum rent, the previous year short working may be recovered. Not the all up to the excess amount. From the excess amount, not from the royalty. If royalty is more than the minimum rent, if royalty is more than a minimum rent, then from the excess of royalty, you are permitted to recover short working of the previous year. That is called as recoupment of short working. So when the royalty is in excess of minimum rent, it is called as right of recoupment. Right of recoupment. Right of recoupment means you are having right to recover only when there is a excess of royalty over the minimum rent. Excess royalty is there, there is a permission or there is a right to recovery. Okay. The previous year short working can be recovered only when there is a excess of royalty over the minimum rent. Okay, this is called as recoupment of short working. And then how to recover? There are mainly two conditions. There are two conditions regarding the agreement. This is the first one. Right of recoupment will be decided for a fixed period from the starting year. In the agreement, they makes one clause regarding how to recover, how to recoup. Fixed period for first 2 years, first 3 years, first 5 years, like that, they makes an agreement. Okay. Recoupment of short working. Recoupment short working will be decided for fixed period from the starting year, from the date of royalty agreement. Royalty agreement. This is called as time units, based on time unit. Okay. So, first 4 years, first 3 years, like this, they makes an agreement. Within first 4 years, the short working is to be recovered. In the first 4 years, you are permitted to recover the short working. After that, you are not permitted to recover the short working. Like this, there may be agreement. And second is, the right of recoupment will be decided for the floating period after arising of short working. Floating period. Fixed period, floating period. Whenever the short working arises, from that year, they will give you some fixed number of years. They will give you certain fixed number of years. From that, you have to recover the short working. For example, short working can be recovered in the next 2 years. Short working can be recovered in the next 2 years from the year of short working. Short working can be recovered in the next 3 years from the year of short working. Like that, they makes an agreement that is called as floating period. Floating period. Regarding these two, you remember only 2 points. One is the word first. They use the first. First 2 years, first 3 years, first 5 years, first 4 years. Like this, they make the agreement. Or the short working can be recovered in the next or following or proceeding. The word you remember. Regarding second condition, the word used is next years, following years, or preceding years, proceeding years or subsequent years. Like that, they use the word. I'll take one example and clearly tell you how to calculate the royalty. You remember these points. Okay. This is regarding recoupment of short working. Then, right of recoupment may restrict the amount of recovery also. These are the 2 points. Along with these two, there is additional condition. The lessor may restrict to recover certain fixed amount every year, not more than certain fixed amount. You are not permitted to recover all the short working, but you are permitted to recover short working to the certain fixed amount every year. That is called as right to recoupment may restrict amount of recovery. Okay, I will tell you these 3 points by taking one example, then it will be clear to you people. Then next point is irrecovery of short working. What is irrecovery of short working? Irrecovery of short working means whatever short working arised in the previous year, that short working is to be recovered in the following years by fulfilling the conditions. If it is not possible to recover the short working within given period of time by fulfilling the conditions, the unrecovered short working is called as short working irrecovered. Irrecovery of short working. Irrecovery of short working means it is the short working which is not recovered within a given period of time. That is called as, that amount is called as irrecovery of short working. Okay, irrecovery of short working. And this amount is a loss to the lessee and it is a profit or income to the lessor. Okay, and this amount is transferred to P&L account. This is transferred to P&L account. About these points, you once again remember what is royalty, how to calculate royalty, then what is minimum rent, and difference between minimum rent and royalty. Excess of minimum rent over royalty is called as short working, and how to recover short working, then how to show the irrecovery amount. There are 5 items. First item is royalty. First, it is possible to calculate royalty. Then you know the minimum rent. Then calculate short working. Calculate recovery of short working. Then calculate irrecovery of short working. These are the important and basic points you have to remember regarding the royalty accounts. This is enough for today, and we will see the next points, next technical terms. There are another 2-3 technical terms we will see in the next class.